Time now for past picks, and the first one up is Electronic Arts. David, let's take a look at this one. The company first. Not everybody knows this company. What is it?
So Electronic Arts makes and distributes video games, and they've got some wonderful titles. And this is a place that people are willing to spend their disposable income.
Okay.
For Electronic Arts, you know, one of their drivers is a move from selling these things in stores to selling them online and downloadable online, and then multiplayer games where there's people playing on the web, you know, all around the world. So we continue to own Electronic Arts. It's a very strong company. In fact, technically, I think that the price that it's trading at right now is very close to breaking out to new highs. It's been consolidating for about a year, and I think it looks quite interesting. We also own Take-Two Interactive, TTWO, which has also been a good performance, performed a little better over the last year, but I would buy both of them right in here at these prices.
Okay, let's take a look at the next past pick, Goldman Sachs. We were talking about some of these during the break. It's been really, really tough for a lot of financials, whether you're an investment bank, a money management company, and or a traditional bank.
It's been very tough for the financials for a couple of reasons. So this was a disappointment. We got stopped out of the position. But the problem for the financials is, first of all, with very low interest rates, you know, for many of the banks and so on, it makes it hard for them to make a spread on the cost that they borrow at versus what they can put money out at. For the companies like Goldman Sachs, they are being regulated into the ground, which probably is for good reason, but it's changed their business models. It's made it harder for them to generate outsized profits. And, you know, markets have been sideways over the last year, so their trading volumes have not been as strong. I think that ultimately, if we're going to have a stronger market, you should see these financials get going. But I would prefer at this point to see it happen. In the financial space, we really like BlackRock, which has secular tailwind coming from their ETF business. I think that that's very attractive. We own some Canadian banks and we own a couple of U.S. regional banks.
Okay.
But the asset management space in general and the investment dealers, you know, continue to be very challenging while the market has been consolidating.
David, you've talked a little bit tonight about being stopped out of your position. So maybe just describe exactly what that means, and at what percentage to the downside do you do that at?
That's a great question. So, look, when you make an investment, doesn't matter how sophisticated you are or how unsophisticated you are, everybody hopes to make money. But we know that that doesn't happen all the time, right? I know in our case, if we make 20 investments, 2 or 3 work out much better than we thought, 7 or 8 are pretty good and a bunch don't work. So my success is holding the ones that do well and getting the heck out of Dodge on the ones that don't do without losing too much.
Okay.
And so when we make any investment, let's say we pay $20 a share, we identify a price below the price we're entering at, which is our line in the sand where we say uncle.
Yeah.
And the difference between the two is my risk budget. And I think everybody should do that. Decide before they enter where they would say, maybe I've made a mistake.
We got to get to your next past pick, but
Yep.
what is that line in the sand? What's that based on?
So we use a type of chart called a point and figure price chart.
Okay.
There's lots of ways you can do it,
Okay.
but it should have to do with the historical trading of a security and when it starts to deviate from the way it is historically traded.
So you look at the technicals?
Yes, we do.
Okay. Let's take a look at the last past pick. It's UnitedHealth.
So UnitedHealth is another company we continue to own. This is really the largest provider of healthcare coverage. In the U.S., there's about 50 million subscribers. They've got about 4 million subscribers in Brazil. They're in 125 countries around the world. This is a play, again, on growing spend on healthcare. As they get larger, they become a little more efficient. The industry is consolidating, and I actually considered using this as a top pick today. I would continue to buy the stock here.
Why is it still doing so well, though, David, with all the concerns about Obamacare and how many companies can't afford it? They're going to be hiring less people, less full-time people. Why is this still so outperforming?
Look, managed healthcare is a growing industry, and it has been consolidating. So those that remain, and that when there are acquisitions done, there are costs cut out, and the profitability is there.
Okay.
So again, you know, there are going to be people who are in different types of insurance, but we have an aging population. It's going to be very hard to see how this industry is really badly challenged, and it's not very economically sensitive, of course.
Right.
Which makes it attractive for a lot of investors in the world that we're living in right now.
Okay, we're going to be back after the short break. Our number is 1-855-326-6266.